Hello everyone, and welcome to the bi-weekly Eco-Investment Update for, I believe we are at May 17th, 2015. One of the most fascinating things to me is the whole subject of being patient when it comes to investing and sticking to your guns. And as I've been doing these eco-investment updates for the last year and a half, I've had probably the majority of the people that have written me and asked me things, it's had to do with tips for being a better investor or mistakes that people make. And I want to say the number one mistake that I think that people make when they make investments is they get a great idea in their head, like the stock markets and my ideas were in the greatest stock bull market in the history of the world right now. And I'm sticking to it. I haven't varied off of that one iota since 3,000 Dow, 3,500 Dow points ago, way back in the past. And people write me and say, "Man, don't you ever change your mind?" Or what's the story on this stuff? And I'll tell you what, one of the worst things, as I was starting to say in the beginning, that people do when it comes to investing is they figure stuff out perfectly. I mean, they're geniuses. They can see something coming. I don't care whether it's a sugar shortage, a gasoline shortage, or some company's got a fantastic new product. They'll take a position in that stock to try to benefit from their thinking. But what often happens is, things don't move. It doesn't take off to the moon the second they get aboard, so they become impatient. We like to think when we finally discover it, then everybody should be on board, and that thing should be zooming and taking off. The second people do is they don't have an ability to see their investments through to fruition. In other words, let's say that I don't know, XYZ company came out with a great new device that you could just plug something into your, it's like a Google thing or something like that. You could no need to be driving your car actively. You can just turn it over to the computer, and you can just sit in this new system, and it can do everything. Park your car, take you wherever you want to go, find the best gas. I mean, it does everything. And you think to yourself, well, this company's small, or maybe this company's medium-sized that developed this technology, but this is a really cool thing. Or maybe it's a new computer that's as thin as just a plastic film, a thick piece of plastic. And it's so revolutionary. The battery's like invisible or something. You're thinking to yourself, this is really efficiency at its finest, this thing. And you decide to invest in that company. And then lo and behold, maybe 3 weeks later, that thing maybe goes from $30 a share up to $38 a share. And you say to yourself, yes, I am kicking ass. And you take that profit, an $8 profit, about a 25% return or some 28% return, and you stick that in your pocket and you feel good about yourself. And then 2 weeks later, you open the paper and you look it up on the internet, and suddenly that thing's closing in on $50 a share, and you think to yourself, damn. So the point is, between being impatient and sitting on a stock, and if things don't happen immediately within that time frame of a week, 2 weeks, a month, 2 months, you just think that you start to second guess your analysis. And as a result of second guessing your analysis, you come to the conclusion that you made a mistake. And you sell the investment, and then often happens, you turn around a year later, you're just thinking, well, I'm curious, I wonder whatever happened to that company, and stock that you bought for $18 a share, you see it's $187 a share now, and you're thinking to yourself, I nailed it, but I didn't make any money on it. So those two aspects of being patient and being able to hold for the long term are really two keys to a lot of investment success. I'm not saying it's bad. I do a lot of trading, okay? I might hold something for a week, 2 weeks, but there's positions that I hold and build for long periods of time because I think my analysis of them is exactly correct, and I think they represent great values or great opportunities. And I know that it takes buying to put stocks up, so I know if I'm there early, it's going to be like a boring party. Or when I host Google Hangouts on the Rosie O'Kelly channel, in the first 15-20 minutes you sit there, you're just looking at the cam because nobody's coming in to join you on cam. You know, 15 minutes are like agony, right? You have to do your sit-down comedy routine and stuff. Well, the thing is with being patient is if you have a good idea, you have to accept the fact that because you have superior intellect, that you thought of it before other people did. And you think to yourself, well, there's well-paid analysts that think of things before I do. Wrong. Analysts cover certain companies and they rarely look outside the box. Analysts are usually only attracted to attractive investment opportunities after they've already been seasoned for a while in the market. And you'll hear on or you'll read on the Bloomberg wires, Credit Suisse has initiated coverage on XYZ computer company with a buy rating, strong buy. You understand what I'm saying? One of the things that I had a hard time accepting and believing about myself was that I could come up with good ideas before other people did. But I had to learn to be patient and see those ideas to fruition. In other words, you can invest because you think it's a good idea, that this thing's going to be great. And this is separate from the investing that we do, that we think to ourselves, this is really a value proposition like real estate in 2011, 2010, 2011. You understand what I'm saying? There's times you buy because you think that the timing is good, and there's times you buy because the idea is good. But in all those cases, to profit by that superior judgment and that courage to go in when nobody else is at the party and be the one to flip on the lights and sit down in a chair and just wait. Well, it can be one of the most agonizingly frustrating parts of investing. But there's no doubt that people that have an idea, a thesis, and they stick to their guns until the whole thesis has run its course are the ones that inevitably make the most money, but they are few and far between because you have to go against your human nature to be impatient, to want rewards tomorrow, and to be recognized immediately for your superior judgment. This is why so few people succeed in the market as another point, because so few people are willing to stick to their guns because they think somebody else must know more than them because they went to an Ivy League school, they're a chartered financial analyst, they visit these companies and stuff. I want to tell you, that's bullshit. You're just as capable of having a brilliant economic and investment insight as the guy that's pulling down $250,000 a year and getting a $2 to $3 million bonus. And you may have the edge on him because you have A, the courage to act on what you know, and B, the courage to sit on it until it comes to fruition. Well, it's just an interesting little sort of a philosophical discussion today. There's some recommending reading I would like you to do if you can online. There's a real old-time stock operator called Jesse Livermore. You may have heard of him before. He was probably, him and Bernard Baruch were probably two of the most successful speculators in history. And although Jesse Livermore ended up killing himself in the Hotel Netherland in New York, I think in 1941, he was a brilliant investor, and you can gain a lot by looking at his thinly veiled autobiography, Reminiscences of a Stock Operator. And it's one of the most influential books amongst people that really want to lift their investment game. And it covers some of the things that we talked about today, and it's one of those books, you may have some yourself, it's one of those books that you can pick up every other year. You see it up on your shelf and say, hey, that was interesting the first time. You read it again, and you can read it every year, once a year, and you can find it as fascinating as the first time that you ever read it. And you can learn a lot. Even though it's set in the early 1900s, late 1890s, you can learn a lot about what it takes to be a great investment. I'm going to leave on this closing note today, and I want to tell you once again, something to bear in mind is, there's an old saying that history doesn't repeat itself. Well, it may not repeat itself, but sometimes it can rhyme really well, okay? And the thing that never changes, though, the thing that really never changes is human nature. In other words, you wonder, why does history repeat itself, or why does it rhyme so well? Because generations come and go that learn the lessons, new generations come along, and they have to relearn the same lesson again, because the one constant over history, whether it's investing, warfare, economic advancement, political ideologies, the one overriding thing is this: human nature never changes. We are driven by wants and desires, and as a result of that, on the whole, when it comes to investing and making money, people get greedy at the worst time because of human nature. They tend to do their biggest purchases near the top of markets because everybody's got the same idea. Better run out and buy now, it's going crazy. And then of course when you hit the market just when everybody else does buying, hey, you look over your shoulder, there's nobody left to buy behind you. You're the last one in. Because greed is a strong human emotion. I don't want to call it the fatal human flaw, but it's one of the characteristics of being. Then you get on the elevator, you're the last one on the investment, and all of a sudden, you reach over with those cutters, cut that cable, and there you go. Racking up a huge loss in the market. Then we get to the other end, and what happens? We're about to hit bottom. And then the strongest human emotion of all takes over, fear. And at the exact moment of maximum fear, there's this huge disgorging, this huge throwing out, this huge puking of the investment. There's such a climax of selling. There's such a frenzy to get out of it. That after that fear-driven frenzy selling climax, there's nobody left to sell. There's people left to sell, but you'll never generate that volume of disgorgement again. And where are the real smart people that can, the people in the world that can capitalize on that? The people that have the guts of a cat burglar to go into those situations and back up the truck and start buying. because they know they have the safety of a climax to end all climax behind them. Just some things for you to bear in mind. Once again, that's Jesse Livermore's thinly disguised book. It's called Reminiscences of a Stock Operator. It's really a fun read. It's really cool. It's not heavy. There's no market crap about balance sheets and stuff. It's just a damn good investment read. I think the author is a thinly veiled type, Edwin LaFay or something like that. So thanks for listening, everybody. I know it was a long one today, but I hope you enjoyed it. Thanks so much for watching. See you in a couple weeks.